My play is Goldman Sachs, who, according to reports, will lay off as many as 3,200 employees. Macro uncertainty forcing them to search for cost savings. More than a third of those job cuts are expected in the trading and banking units. Like most big banks, Goldman has been hit by a slump in global deal-making activity. The bank's third quarter revenue dropped 12% from a year ago. Investment banking has been the key. Revenue plunging 57% year over year. They will report earnings 1 week from tomorrow. The big bank earnings get going on Friday, so we'll get a better glimpse at the sector. As for today, you can see shares up just over 1%. Investors, generally speaking, cheer this type of news. Could end up being the biggest layoffs since the financial crisis, Seana. Usually, I would think investors would cheer it a little bit more, being that it's fairly large cuts, but there looks like there's more to come in this sector.
Yeah, large cuts when you compare it to Goldman Sachs' overall workforce amounts to just over 6% of its workforce, which is actually below what was reported as kind of the upper limit last week when there were reports that Goldman could cut up to 8% of its workforce. So maybe this was less than what the street was expecting. It's going to be interesting to wait and see what we hear from David Solomon, what we hear from a number of the bank CEOs over the next week or so, because I think a lot of the market activity, at least over the next several weeks, is kind of going to be based off of what we did hear from the banks. We know how integral, how important they are to this earnings season. We heard it from Brad, our markets guest, earlier on in the program. That's really going to set the pace and really set the scene for earnings this season when so many analysts are worried about some of those downward revisions and how bad it could potentially get.